you own U.S. assets, such as U.S. real estate or shares of a U.S. corporation? If you do, then your estate may be subject to U.S. estate tax when you pass away. Despite the fact that you are a Canadian resident, your estate may be subject to U.S. estate tax if, at the time of your death, you owned U.S. assets with a fair market value greater than $60,000 US and the fair market value of all your assets is greater than the U.S. estate tax exclusion amount of $5.45 million US for 2016. These amounts are subject to change, so be sure to discuss this with your tax advisor and check the IRS website at irs.gov for up-to-date information. Common U.S. assets owned by Canadian residents include U.S. vacation homes, shares of a U.S. corporation, and physical property located in the U.S., such as boats, planes, or helicopters. Shares of a U.S. corporation are included in your estate for U.S. estate tax purposes even if they are held in a Canadian registered account, such as an RRSP or a TFSA. If you do have a potential U.S. estate tax liability, there are several planning strategies that can be used to potentially reduce and sometimes even eliminate your U.S. estate tax liability. If U.S. assets, such as U.S. securities, are owned by a Canadian corporation or a U.S. vacation home is owned by a Canadian trust, those U.S. assets may not be included in an individual's estate upon their passing if certain formalities are met and the individual does not actually own the U.S. assets from a U.S. estate tax perspective. Even if there's no U.S. estate tax payable, your estate may still be required to file a U.S. estate tax return. The failure to file a U.S. estate tax return can result in a denial of credits that would have been allowed by the Canada-U.S. Income Tax Treaty. In addition, an estate or beneficiary may not be able to sell U.S. real property without proof that a U.S. estate tax return has been filed and any tax owing has been paid. Two key things to remember when it comes to owning U.S. assets are: 1, quantify your potential U.S. estate tax liability. 2, ensure that the U.S. estate tax savings from any planning strategy outweighs the cost of implementing that planning. There are always costs and benefits to every planning strategy. So before implementing any strategy, be sure to speak to a cross-border tax advisor to help quantify that potential U.S. estate tax liability and review the possible benefits of implementing a particular strategy against the costs. If you don't already have a cross-border tax advisor, your BMO professional can help you find an advisor to meet your needs.